If you are a business owner, you will know that now is the time when the interaction with your auditors is at its peak. In this video, I'm going to be talking about the different due dates under Income Tax Act, Companies Act or LLP Act for your business and what you need to do about it, and also the implications for not filing your tax return. I'm Yashwanthnijagal, a chartered accountant in practice. Every week, I post one video which will certainly provide you with valuable financial insights. To start with the basics, we need to understand how you can determine what is the due date which is applicable to you. Now let me break this down into three categories. Let us start off with a private limited company. In this case, irrespective of your turnover, the due date for filing your income tax return is 31st of October. And in case tax audit is applicable to you, which is if your turnover exceeds rupees 10 crores, that is subject to your cash receipts or cash payments being less than 5% of the total receipts and total payments. The due date for filing your tax audit report is 30th of September. Now the second case would be LLPs or limited liability partnerships. In this case, as per LLP Act, audit under the LLP Act is mandatory if the annual turnover of the LLP exceeds rupees 40 lakhs, and only in such cases the due date for filing the tax returns of the LLP would be 31st of October, and in all other cases the due date for income tax return filing for LLPs would be 31st of July. The third category would be in case of partnership firms or individuals. In this case, the due date would be 31st of October only if tax audit is applicable. Tax audit would be applicable in two scenarios. One is if in case your cash receipts or cash payment exceed 5% of your total receipts or total payments, then tax audit would be applicable if the turnover is more than 1 crore rupees, and in all other cases the tax audit would be applicable only if the turnover exceeds rupees 10 crores. So you need to first determine whether you come under the applicability of tax audit, and if tax audit is applicable, then the due date for filing the returns for individuals and partnership firms would be 31st of October, and the due date for filing the tax audit report would be 30th of September. Now, as per Income Tax Act, what could be the implications if you don't file the tax audit report or the income tax return on time? You will first lose the benefit of carry forward of loss. That is, if you have incurred any loss during the financial year, you will not be able to carry forward the loss to the next financial year and set it off against the income in the next financial year. The second and the less significant implication would be your late fees and additional interest, which will be calculated depending on your tax liability. Now let's understand the due dates for compliances under the Companies Act. There are two forms which have to be submitted. One would be the AOC 4, which has to be submitted within 30 days from the date of AGM or the last date to hold the AGM, which is 30th of September. So the due date for filing of AOC 4 would be 29th of October, and in case of MGT 7, it has to be filed within 60 days from the date of AGM. So the final date for filing MGT 7 would be 28th of November. And similarly, in case of LLPs as well, there are two forms which have to be submitted as part of annual compliance. One is Form 11, which has to be submitted within 30th of May, and Form number 8 with the financial statements, and this has to be submitted within 30th of October. It is important to know that the late fees as per Companies Act and as per LLP Act for delayed submission of forms is very high. It is rupees 100 per day of delay per form. So make sure that there is absolutely no delay with respect to submission of annual compliance forms as per Companies Act and as per LLP Act. What happens to your due date for filing your tax returns if you are a partner in a partnership firm which is subject to tax audit? In this case, the due date for the individual partners also will be 31st of October, and in case of an LLP, whether you are subject to tax audit or not, all the working partners, if the LLP is subject to audit under LLP Act, which is if the turnover is more than 40 lakh rupees, your due date for filing the tax returns for the individual partners would automatically be 31st of October. It is super critical to understand that if you are a director in a private limited company, whether the company is subject to tax audit or otherwise, the due date for filing of tax returns for the directors would still remain 31st of July and does not get extended to 31st of October. So if you want to understand the major consequences of late filing of your tax returns, one would be the disallowance of losses of your business. The second would be the interest and penalty which is charged under the respective act. And the third would be the possibility of penalty being imposed by the income tax department for late submission of the tax audit report. Don't forget that you still have an option to file belated returns or a revised return if you have filed a wrong return, and you have time up to 31st of December 2023 for filing such belated or revised return. And as always, no tricks, no hacks. Follow me for valuable financial insights.